Okay, so we are going to understand the concept of stock market today. Okay, followed by that, we will understand the regulatory aspects of the same. Okay, it refers to the market in which buyers and sellers participate to buy and sell the securities at the best possible price. Okay, so in a general sense, everyone is familiar with the stock market, which is basically a main platform to raise funds, okay, for many types of business ventures. Let's say suppose there is a person who is willing to start his business, but is now short of funds. So where should he go? He should go to stock market to raise the funds by issuing different types of financial instruments. But in case of stock market, there are only shares which can be issued by the company who is having short of funds. Okay, now what is a stock market? It refers to the market, okay, in which buyers and sellers participate to buy and sell the securities. What type of securities? Only shares. In stock market there are only shares at the best possible price. Okay, now what happens? There is a authority also. There are many specs related to stock market. Let's say there are insider trading. What is insider trading? See, there are many big companies that are listed on stock exchanges. Okay, so what happens when there is a inherent excess of employees working in those corporations who are listed on the stock exchanges, manipulate the stock prices on the stock market because of having inherent access to public sensitive information. Okay, that information which is not required to be disclosed to the public. So there comes insider trading. So insider is used for employee employee of the company whose shares are listed on the stock exchange. Okay, so an employee who is having access to such sensitive information would likely to be, manipulate the prices on the stock exchange. And there come also buyer and seller protection. There are lot of intermediaries involved in the stock market process, like portfolio manager, mutual fund distributor, stock broker. Okay, so there are many types of intermediaries involved in the stock market. Now what happens? Buyers and sellers dealing with such type of intermediaries will not be fooled. Okay, so that is why the responsible authority, okay, prepare rules regarding that. Also, capital, there are also regulations related to capital raising and trading. Okay, so if you are familiar with the stock market, you will be knowing that there are different timings of opening and closing of the market. Like we have general timings of market in our malls. So there are similar timings available in the stock market. Okay, and there are many types of trading regulations developed by the competent authority. Okay, so we have understood this term, this one, and this one, all in one. Okay, relation to which aspect? Relation to stock market. However, the rules regarding these three will only be developed by one authority that we know as Securities and Exchange Commission. Okay, because it is the authority which has been designated by government to take such decisions and frame the rules accordingly. Okay, so we have derived our solution. Okay, and that matches surely with choice B. Okay, so you can write down sheet 1, sheet 2 onto your notebooks for future reference. However, our correct choice is choice B. That's all for our solution. Thank you.